Have you ever wondered what the pros and cons are to investing in stocks? Well, if you have, then stick around. If you haven't, then still stick around, because today we'll be discussing the pros and cons of investing in stocks in the stock market. Welcome everyone to Don't Fear Finance. This video we will look at how much good will the stock market do for you. Will it gain you more money than you lose? What are the cons? Will it lose you more money than you gain? I first off want to say that investing is complicated. Most of the time, people mess up for so many different reasons. I wouldn't recommend this as something to have as a manual for learning about the stock market, but as a video to come back to remember the reminders of things that can go horribly wrong and very right. Before we get into the video, make sure to like and subscribe. It helps me out a lot, truly. I hope you guys enjoy. Now into the video. Stock value. This is a very risky thing when you have little to no knowledge about it and how to find a stock that has good value now and in the future. If you want to see how to do that, then go check out how to invest in the stock market for beginners, because there's a part of it where I talk about finding the value of the stock. I would recommend that you watch the entire thing if you're new to investing. The cons of value investing are: number one, the values of the stocks are unreliable and sometimes kind of crappy. One day a stock value could be doing incredibly well, and another it could be selling for half of its original selling point. The second con is that the value of the stock sometimes drops so low that you, the investor, could lose way more than your selling point, which is a point of which you've lost so much money that you have to pull out of the markets so then you don't lose more money than you already have. All in all, we don't know how a company or industry is going to perform in the near or far future, no matter how many equations and how much time we put into preparation before investing a single penny. We can predict the outcomes of different stocks and industries based on the past, but that isn't reliable. What are the upsides to stock value investing? When the returns are good, they are really good. The stock market, in my opinion, has two extremes: the good and the bad, and a little bit in the middle, which is a bit of a gray spot, which the returns are like, meh, they're okay, but they're not the best, but they're not the worst. You can start in the stock market with no degree and very little money. This is a pro because I've said this a few times, that you need some knowledge about investing, but you don't need a college degree. If you want to work for traders, then you're going to have to go to trading school, but that's not nearly as expensive as university. You also need a bit of education on what you're going to invest in, no matter if you're working as a trader or if you're just investing in the stock market, so then you can have some extra money when you retire. The second part of this is that you don't need much money when you invest in the stock market. Even though you need some money as a startup campaign, if you play it right, then you can make millions off of a few $1,000s put into some smart investments. If you plan and invest correctly, which sometimes happens and sometimes doesn't, you could grow your wealth into something unfathomable for the human mind to even comprehend. Another huge upside to investing in stocks is that when you invest in stocks once or twice, you're not limited to investing again. If you see that a stock has tripled from $1 to $3 in the 2 months after buying it, then you're not limited to only buying those 1 or 2 stocks that you bought. You can buy as many as you want, because with your mega big brain, you see that you could make so much money off of that one investment. Con to investing in the stock market is that there is no guarantee of you getting paid or making much money on your investments. This could lead to massive losses if you invested in something that lost you a lot of money, or the company has lost a lot of money, or the industry has lost a lot of money. Alongside this, there is a smaller con, which is that you lost quite a bit of time, which does not compare to the feeling of sadness and anger in yourself for losing that much money, or even not even that much money. It's still the same feeling. No matter what happens in the market, there is always going to be a roller coaster of emotions, because the market changes all the time. This leads me into my joint pro and con point. The market is always changing, be it whether a stock price goes up in value or down in value, or a company or an industry has blown up or is being knocked out of the market because a huge industry is knocking them out of business. This could be a pro, because if you see this coming, you could take advantage of it and make a lot of money. Just like a weather analyst sees that a hurricane or flood is coming and evacuates the place, town, country, whatever that it is going to hit. But if you are caught off guard, you could lose so much money if you invested in the wrong thing. I'm going to squeeze in a little pro here for a sec. When you invest in the stock market, you can't lose more than you invested. For example, you put $5,000 into a company. They grew to a size where you made $1,000 profit in that company. Pretty good. Then, all of a sudden, the company goes bankrupt. You could lose that $6,000 that you invested, but nothing more. You will always lose money in the stock market, no matter if you are a pro or an amateur. We are not perfect, be it in our personal lives, love lives, or trading lives. We all make mistakes. Adding to our non-perfect nature, the markets are volatile, meaning that they change very quickly. For example, the markets had different profits and losses in 2008 than in 2011, as well as the past year, 2020. These are many different examples of returns and volatility in the markets. A lot of the time when the markets shift or have massive losses or massive gains in an industry, shareholders buy and sell at once, changing the prices and values of different company stocks. This could leave shareholders, including you, in a panic, making them make impulsive decisions. Long term, this could be so stupid for your money. It is difficult to make long-term decisions in a matter of minutes or seconds. If you're in this situation and you have a bit of time before everything goes down, step back, think about it, discuss it with a colleague or a friend, and make your decision after that. Last pro, but definitely not least, the stock market can keep up with inflation. The stock market averages a 7 to 9% return per year. The average inflation rate per year is 1 to 2%. If we were to take off 2% of our earnings due to inflation per year, then we would have still a 5 to 7% turn rate per year. Pretty good. If you kept this in a savings account, you would lose money and not gain anything because the bank's return rates are horrible. The stock market is a great place to put your money if you want to keep up with inflation. If you want to be really safe, then you should invest in blue chip companies, which are investments such as a bank, real estate, things that are quite safe but yield high returns. If you want something a bit more risky, then you can invest in companies that are in industries that fluctuate in sales and value all the time, such as Tesla. Tesla is in a new and upcoming market competing against an older type of industry. They're in electric cars. Ford are in gas industry. This is a great example of risky because you're still competing against a big industry, and if you're competing against an industry that is still being used and the product is still being bought, then this is really risky for your sales. Plus, Tesla is also growing and expanding at a super rapid pace. The stock market is a great investment with both pros and cons, both of which you should keep your eye on no matter what companies or industries you are planning on investing in. I'm not scrutinizing one aspect of the stock market or hyping up another part. I feel that I need to point out all of the things that you should look for before, during, and after you invest in the stock market. Thank you guys so much for watching today's video until the end. I really appreciate it. The markets are all over the place sometimes. Everything in this video was talked about to make sure that all the stones were uncovered about the market and its highs and lows. Thank you again for watching. Make sure to like and subscribe, and I'll see you in the next video.